Well, the Federal Reserve announcing another round of money printing yesterday. Ronald Reagan's budget director, David Stockman, calls the move, quote, madness, and wonders whether capitalism itself will survive more of Dr. Bernanke's medicine. David Stockman, former Reagan budget director, joins me now. David, great to see you again.
Glad to be here.
Madness, the end of capitalism? You're not a little overwrought, are you?
No, I think it's pretty serious. This isn't QE3, it's QEI, to infinity. They've told you. They're going to print money, and they're going to buy bonds, and when they run out of bonds, they're going to buy all the MBS. And as it is, just with this program, they're buying half of the monthly issue of mortgage-backed securities from all those wonderful agencies that we have in Washington, Fannie, Freddie, Ginnie, half of them. There are some categories of bonds that don't even exist anymore because the Fed or other central banks in the world own them. So what this is the beginning, or maybe the beginning of the end, of the destruction of financial markets. Interest rates don't, well, interest rates don't mean anything. When the Fed holds the overnight rate to 0 through 215, 6 years of zero interest rates, when it manages, mangles, and manipulates the yield curve, what signal, what pricing information does that give to financial markets when it's clearly being administered and manipulated by the Fed?
By the way, Ben Bernanke is going to be meeting with Senate finance leaders on Monday from both parties. It does kind of sound reminiscent of September 2008 when the financial crisis was happening. Do you think that we are that close to things exploding?
I think it's more a case of the cat calling the kettle black. What is Bernanke doing up on the Hill talking to them about the fiscal problem? He is the primary creator of it.
So when everybody's talking about the fiscal cliff, we should be talking about the monetary
cliff. But also he has driven interest rates so low that for the first 5 years of the Treasury yield curve, you can borrow under 70 basis points. You can borrow 3 years at 35. To Congress, to Capitol Hill, that's the equivalent of zero. It's free money. Why should they bite the bullet? Make tough choices.
So like somebody giving an alcoholic a drink, he's enabling Congress to spend more money.
He's coming up to the Hill in order to pass out more drinks.
Okay. Well, his duty, he has two duties. Right. One is to maintain the value of the currency. Obviously, the value of the dollars has fallen tremendously. It hasn't shown itself up as inflation quite yet, but the devaluation is clear. But he's also supposed to keep unemployment down, and unemployment is not down. How is this going to affect the real economy?
Well, it's pretty clear that we've had a massive explosion of the Fed's balance sheet. They've been buying bonds hand over fist, creating money like there's no tomorrow since September 2008. And the unemployment is still very high. If we measured it honestly, it would be more than 11% if you don't count the millions that have dropped out of the workforce. So this isn't working. It is simply putting money into the financial system, fueling Wall Street speculation. After all, you get free money to put into your carry trade and you buy anything with a yield, and it is not helping Main Street or the real economy.
I agree with you on most of these things, so I'm going to try to reach for some kind of explanation for Bernanke. When you're investing in the stock market, you're investing in assets. You're investing in companies that have real assets, that make things, as opposed to investing in gold or something. So at least with his moves, if you put your money in the market, you are investing in assets rather than the gold carry trade, for example.
No, but you're buying assets, whether they're fixed income or whether they're the Russell 2000 or whether it's some company that is probably vastly overvalued, because when you put the 10-year interest rate at 1.7%, way below the rate of inflation, that's sub-economic, that isn't real. You're basically inflating all asset prices, real estate, companies, everything.
Well, what happens when a currency loses its power, which is what you're saying is happening?
Well, I think what happens, the real question is what happens when a central bank fails. Because what they're doing now is they're going all in. They don't even have a limit on this. They've said until unemployment...
By the way, either do the Europeans. The European Central Bank is doing the same thing.
David, that's right. But until unemployment gets to some level that we think is the full employment, who knows in this impaired, injured economy we're in, we're going to keep buying hand over fist. If we run out of bonds and mortgage-backed securities, we'll buy the Russell 2000. And if we run out of that, we'll buy moonbeams and, monetize those. So I think we have a central bank that is out of control. We have a central bank that has basically declared itself the monetary Politburo of the whole U.S. economy. It's almost an economic coup d'etat. That's where we are.
Ronald Reagan did believe in a strong dollar, right?
He certainly did.
And
he didn't believe in
that.
money printing, and he didn't believe in the kind of craziness that's on the Federal Reserve.
He had Paul
Board today.
Volcker as the Fed chief,
That's
not Ben Bernanke.
Heck of a difference.
Good to see you, David. Thank you very much.